Wakey, wakey, eggs and bakey. Stock market is cranky. Portfolios are angry, baby. We got bars over here. Thank you guys for tuning in. We got a lot to talk about. CPI came out. You got the federal funds rate now pricing in over 40% probability of a 1% rate hike. So we might get, quote unquote, rug pulled by the Fed coming here towards the end of July. Now, at the same time, AMC stock is down about 1.5% on the day. And if you look at this on a technical basis, this looks a lot like the last rally we seen in March. So I want to go over that. I want to go over all of the data you guys need to know around AMC stock. So stay tuned and let's make this money, baby. Hit that like button and subscribe to the channel if you guys have not already, because why? It's free 99. If you guys want to come trade with me live in real time, link down below in the pinned comment. We have been fully positioned for this and upcoming downside in the market, so take advantage of that if you guys are not a part of it. Now, first and foremost, what's the main deal for today? Well, it is CPI, and I'm honestly surprised by this little rally that we have seen in the markets. I think we should be down a lot more, and I do think we will come down a lot more. You guys really want to be careful right now because of what we're going to talk about in this video. There's really no way the markets can rally from here, and we'll talk about that a little bit more and make that make some sense. But the inflation, 9.1% in June, even more than expected as consumer pressures intensify. The key points: the consumer price index increased 9.1% from a year ago in June, above the 8.8% Dow Jones estimate. The last CPI report we got and the markets freaked out and fell about 12 to 13% back in June. Well, that was when inflation hit 8.6%. That was a new 2022 high. So June was again another 2022 high. And by a considerable margin, you're up 0.5% from just last month. Now it says, excluding food and energy, core CPI rose 5.9% compared with the 5.7% estimate. Not good. Costs surged for gasoline, groceries, rent, and dental care. So it's definitely starting to span out a little bit more. Adjusted for inflation, workers' hourly wages fell 1% during the month and are down 3.6% from a year ago. Now, what is going on with the stock market? And why does the stock market care about inflation? Well, the higher inflation gets, obviously, the more the Fed will raise rates. And this inflation report changed markets' expectations for what to expect from the Fed by a pretty large degree. And if you watched the channel over the last couple of days, that you know, coming Friday, if retail sales are also good, that is probably going to solidify this 1% rate hike. But right now, the markets are going back and forth between caring about inflation more or caring about a recession. Now, believe it or not, a recession might actually be a positive thing for the markets because inflation would come down in a very big way. The longer inflation stays high and the longer we hold out from a recession, believe it or not, potentially more pain that we could see in the stock market. It's all going to come back to company earnings in the end, and earnings will be towards the end of July. And that will be very, very important. That will probably be more important than inflation, more important than a recession, because if earnings are okay, then that should be a lot of stability in the markets. If earnings are bad, well, that's where people are going to try to figure out how bad are earnings going to get, where should fair values be for these companies. And I think a lot of companies are at that fair value, if not substantially under that fair value. But towards the end of July, that's where things could get a little bit more dicey. Now, as you guys can see right here, we are now at a 44.6% chance of a 1% rate hike. This probability as of yesterday was 10% flat. So we have went up about 34.6%, closer to that 1% rate hike just today alone based off of the CPI report. Now, if we are pricing in over a 1% rate hike by a 60% or more probability, so if this bottom line is at 40% or lower, coming by July 25th, when the Fed meets for their two-day meeting before the 27th, when they will ultimately raise rates, well, you are going to get a 1% rate hike. The Fed is going to do whatever the markets are pricing in. And if the federal funds rate all of a sudden at this next meeting goes to 2.5% to 2.75%, the bond yields have to go up in a big way, meaning stocks are probably going to head down in a quite substantial way. The bond yield right now, the 10-year treasury at 2.94%, there's no way this can stay at this level if you are pricing in a 1% rate hike. If the federal funds rate is going to go to 2.5 to 2.75%, there's no way. The reason why the bond yields are actually down today and why it's kind of helped the markets out quite a bit, and probably the reason why we're not down 2 to 3% right now, is because the recession risk. As you guys can see right here, Treasury yields slide as traders weigh recession risk after hotter than expected inflation report. The long story short, the Econ 101 version of all of this is when markets are fearful about inflation, they think the Fed is going to raise rates to oblivion, the 10-year Treasury will go up. When people are fearful about a recession, the 10-year Treasury will go down, because why? A recession means deflation. If the Fed has to raise rates to astronomically high levels, if the economy does not go into recession, well, the bond yields would go up. But if we go into a recession and the Fed is still raising rates super aggressive, the bonds have to go up in a big way, and it'll probably happen in a very short amount of time once the markets realize, hey, we're in a recession and the Fed is not going to stop raising rates. That's when shit will probably hit the fan in a very big way. But also look at this. The inverted yield curve is now hitting just crazy levels. We are now inverted 17 basis points. That is up 102.35% just today alone. And what this is essentially telling you is that investors are getting paid out more for a 2-year bond than a 10-year bond. That should never happen. That is a sign of a recession that is to come. Now, if we go ahead and look at the option activity for the day, I mean, still, let's go ahead and refresh this. See, Ortex can be a little bit weird sometimes, so we're going to have to go ahead and not Old Navy, Ortex. I don't know why Ortex is weird sometimes. But you could see positive order value for the day still at 84%. 2,500 orders totaling about $250 million. So a lot of call options still coming through. Some people want to try to prop up the markets. We'll see if that narrative does take hold throughout the rest of the day. But long story short, you have to see a move down in the markets as the markets are pricing in more and more a 1% rate hike. There's just quite simply no way the markets can stay up on the Fed raising rates by 1%. Bond yields have to come up in a big way, and that's the bottom line there. Now, if we take a look at AMC on the Ortex, short interest currently sitting at about 18.4%. Free flow out on loan, 26.55%. Shares out on loan, 136.87 million. Days to cover, 3.34. Cost to borrow, 12.19. You can see the cost to borrow minimum at 10.18%, still holding over 10%. Cost to borrow average, 11.71%. Cost to borrow max of 14.65%. So the data looking pretty good there. We'll have to see what the final numbers come in as. But we do have 6 orders totaling about $1 million. Positive order value of 27%. So there's a lot of very large orders that are coming through today that are skewed to the put side. So you do have a December 16th $12 put for $500,000, a January 20th 2023 $3 put for $144,000. So the narrative here is pretty much buy puts on AMC stock. You don't really want to short the stock, but people are buying puts and they are artificially shorting the stock. That is for sure. And if we look at AMC on a technical basis, why I actually love this so much and why this reminds me of pretty much the March rally that we've seen was, hey, look at what is happening just on a lower level. I mean, we're not at the same prices, but you guys can see what has been happening. We broke out above the 50-day moving average, pretty much broke out straight above 15, broke out above the 100-day moving average, came down by the end of the day, broke out again today, came down, but we're not going under 15. We're holding up above 15 very, very well. And if we scroll out and look back to March, that's what happened back here around the $20 level. You broke out above, you came back down by the end of the day, and then we tried to break out 2 more days to get above that. It did not happen, and then ultimately we seen a massive 45% jump 3 days after we were trying to break out above the resistance level. So if we come out and look, I mean, 1, Two, I would expect to see the same thing tomorrow. We try to break out above this moving average, this 100-day moving average at currently $15.65 per share. Likely get rejected again tomorrow, and then maybe on Friday is when we could see a big day and get a 20, 30, 40% day. That would definitely be welcomed here, and I do think that is what is going to happen likely by the end of the week. I think on a technical basis it looks really, really good. If we get more volume that comes into the stock, that is also going to be a positive, because we have been rallying on very, very low volume. The highest volume we have seen as of recently is about 63 million shares that traded hands, and that was on the day Adam Aaron put out that tweet last Thursday, July 7th, and the stock rallied 15%. If we can continue to see low volume and big moves, well, once we get higher volume, you could expect to see an astronomically high move. That's basically the way that I'm looking at it. The RSI currently at 60.95, so not quite at the extreme overbought levels, but definitely not on the oversold side. The MACD starting to look a little bit more bullish, but I mean, this is like a very bullish spread for the MACD. You guys can see the difference between this blue and the yellow line, the spread between. I mean, we're not even close to that, so I think there's a lot more room to get bullish here before you could start to try to call a top to this next AMC rally. So that is pretty much going to be all for this video. If we do take a look at the Stock O tracker data, we'll go ahead and do that right now. Oh, and it's not going to autofill me. It's not going to autofill me. Okay, we'll go ahead and pull it up. About 73,000 calls that are currently in the money for this Friday, 515,000 calls that are out of the money, and 69,000 puts that are currently in the money. So this is a lot of potential dry powder buying pressure that could come in. We'll see if AMC can break out above the 100-day moving average and specifically get close to $20 per share. That's where you could see a lot more activity as we do look at the option chain, and the $20 strike on the call side has almost 51,000 for open interest, and even the $20 side for the put side is at 31,500 for contracts. So that's about 8 million shares that would have to be bought by the market makers if AMC could get above $20 per share. We have seen a lot of volume each and every single day around the $20 level on the put side, as well as on the call side, even today alone at 25,000 contracts that have been purchased so far, only about 3 hours into the trading day. So that is pretty much going to be all for this video. That is what you guys need to know. Watch for more downside throughout the rest of the day today, as we do start to price in a 1% rate hike, the Econ 101 version of all of this. If markets are pricing in a 1% rate hike, the bond yield cannot stay at 2.95%. The bond yield has to come up in a big way. Once the markets actually realize that, that's when you could see some more substantial downside. So all I'm saying is just be careful where we currently sit. I did expect to see a bigger move to the downside, and it wouldn't surprise me to end up closing the day up, or up even 1% or down 2% once all things are said and done. So thank you guys for watching. Hit that like button, subscribe to the channel if you guys want to come trade with me live in real time. Link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.